Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone. Making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Friday, October 24th. I don't know if I'd call it dancing, Chris, but I'm bopping. How about that? I'm bopping. It is Friday. The markets are banging. The song is banging. Y'all are here. You know, got to celebrate the small wins. And over here in Florida, it's a beautiful day. It's like 70, mid 70s out today. Clear skies, low humidity for a change. Fall weather in Florida is nice. Summers are a little warm. Fall's nice. We get it for about 2 weeks. Something like that. Anyway, hope everybody's doing well today. I know that we are going to have a pretty special session this morning. I know that Nathan and Graham have some special stuff in store for everybody today. They are busy getting it together. So give them just a minute or two to get in here and we will get started with the program. Everybody close out. Everybody that's in overnight options get closed out already. Did you guys hit your targets? I think everybody closed out in the first couple of minutes of market open. $26 in Wisconsin. Jeez. 29, 26. I assume that's Celsius and y'all are super warm. You're doing fine. Yeah. Sherry, Roger, Des, Edward, John, Cindy Lou all got out of O&O first thing this morning. Nice way to start a Friday, eh? Nice way to start a Friday. Well, we should also hopefully have from Nathan a weekend options play coming later this afternoon, and hopefully a 60-minute trade from Graham this morning. Let's see, where's the VIX at today? We're a little over 16. So although it's headed downward, I don't know which way he's going to go with that. We started off about 16 and a half, and now we're down to almost down to 16. So I don't know if he's going to hold off on 60-minute today.
Hey.
Keith said couldn't get
Hello,
filled last
everyone.
night without chasing it. Yeah, well, good thing not to chase it there, Keith. That's a good, better to be out of it than to chase it, right? So you did a good thing there. It's disappointing when you're not in it and then it hits first thing in the morning, but better to be out of it than chase it and take a loss on something that should have been a win because you chased it. Morning, fellers.
74 degrees in Texas. Wish I was there. It's not quite. It's 40 here, so it's not like miserably cold or anything. But 74 would be nice.
It's beautiful here. It's right about
It's
76 or 78 right here. So
Yeah, it's amazing.
Love it. Colorado Springs. Hi, Sharita.
Vladdy. Yeah, the 60-minute income, we don't have a signal yet either way. We've got a pretty big range here, 0.4% range. So that's a really, really large range. I think about the S&P doesn't even normally move 0.4% in a day. That's just our range to break out of to get a signal. So we've hit the last 8 of the last 10, I think. Let me go make sure that's accurate.
the VIX looks like it's on its way down to 16.
No, we've hit 10 of the last 12. 10 of the last 12. I would not be so upset if we don't get a trade today. I'm pretty happy with that. With the big range like today, we've got. Are you guys using your indicators? The VOLD is going higher. Meanwhile, the advanced decline is going lower. VIX is at 1645, which is getting right close to that 16 number where it gets a little tricky. So again, I would be, I probably, even if we get a signal, I'll probably go a little bit lighter today than usual, just because that range is so large.
Yeah. Tesla is. Someone mentioned Tesla was looking good there. Now it's flipped back down. Hopefully get a bounce
also
back on Tesla.
Speaking of getting bailed out, how about Robinhood? Anyone in Hood from the perfect income trade? Holy moly, what a week it's been! But we are now $2.50 all the way in the money. So completely bailed out there.
Wow, awesome. AMD is over $250 a share now. Oh my goodness.
Wow. Dude,
what a monster that's
okay. I promise we're gonna have a super, super cool class today. I'm going to go through Option Omega. We're gonna do a back test together and look at an overnight trade. That's my it's my chance to see if I can outperform Nate on the overnight options. I'm just kidding. I'll explain it all in a second. But while we're getting this party started, look at Pulpit chart of Oklo, Nate.
Oh, let me see Oklo. Oh my goodness.
Like this.
Why didn't we trade that one? That looks like an app. I mean, that looks like it's going back to 190.
Guys. Can I see? Oh, I didn't share it yet. Here you go. Check out Oklo.
Yeah.
Wow, gapping up, huh?
I mean, that is it. It kind of looks like the Hood chart. Let me go to Hood. Obviously, very different stocks. Here's the Hood chart. Kind of similar nosedive, bouncing back. Oklo's got some real big upside here. Now, I know this is a zero revenue company, so it's one that anytime we get a little scare in the markets, this is going to be one of the first to nosedive because it's major PTSD of .com bubbles. Just like all the quantum computing stocks are the same way. But if you want a speculative trade, actually, I give you guys a trade every Friday. This one has earnings coming up. Not a big earnings mover. I might take this for my monthly trade portfolio. Let me take a look at Jev. Yeah, Oklo looks a lot better right now. I mean, this looks risky. Like this is one that you could probably go out in the money for 1,000% mover. Let's go ahead and look at that just for fun. Let me see where we are. Just ignore that. Pretend you don't see that.
Alex posted 3 closeouts this morning for wins.
Come on, Dave. We just got started with our day. Now we're already playing catch up here. Oh my goodness. All right. Let me go up here. I don't want to go all the way up. I'll check the market maker move as well. But 180, 170 by Christmas is definitely in range. Let me check 180 by Christmas. This is not linked. Here we go. $54 implied move. So 180 would actually be within that move. That's wild. All right, let's check the strikes here on 180. Decent volume. We'll see what it is. $110. That's pretty expensive if you think about it, but little under 400% if Oklo bounces back. Let's go all-time high, see what happens. I'm probably not going to take an all-time highs bet, but definitely within range. Okay, that's just wild. Look at this. I just noticed this, Nate. If you want to buy, what is this, 20% out of the money? It's $1,000 a contract.
Oh my gosh.
That is insane.
And see, Graham, you wonder why I like covered calls. I can't resist them. I mean, look at that.
If you buy this far out of the money, you need Oklo above $200 to break even. That's a 33% move in the stock to break even. Holy moly. All right, let me go see if we can find a trade here. If that'll fill, I'll take that, but it's just kind of wide. You'd have to use a
wow, $1,000, 20% of the money. That is a heck of a gamble.
All right, I'm going to go ahead and look here. Nate, I got to pick a monthly pick for us. We're in my monthly portfolio. I did Bitcoin last Friday. We're putting $1,000 in each trade, giving it a month to get above. I'm trying to go one strike out of the money, about 120, 160% ROI. Don't know if you got one for me. He's awfully quiet. Man, look at Rocket. I had that class the other day. I want to do Rocket for this one, but it was at $16, up to 18 now. Man, earnings for Google.
Yeah, a lot of stuff has earnings, obviously. I mean, the one that I've been hitting pretty regularly is Meta, but they have earnings as well.
AVGO is a nice looking one.
I think Meta's, still in good position to get back to all-time highs here.
I think I might do AVGO. You said Meta?
Well, yeah, but they have earnings also. But that's the one I've been waiting to kind of do that catch-up trade. I have one expiring today. Did anyone? I don't even remember sometimes if I took these trades in opening playbook.
Which ones?
This one was the Meta 697.50 700. It might have been one of the high conviction trades. I'm not sure. But that one's going to close out today for a full win unless Meta drops 10% in the next.
We took the 697.50 700. Is that the one you're talking about for today? Yeah. So that was in closing playbook. Yeah.
Oh, nice. All right. Well, there you go. So that was that's gonna be about like $1,000 winner for me. That one looks really great.
All right.
Got in for like $1.55.
I'm gonna do AVGO. I like AVGO a lot here. They don't have earnings. I would have done Google, but they have earnings next week. So maybe we'll do that next Friday. I'm going to be buying the 21st of November expiration. So that gives us 4 weeks till expiration here. And then let me just check the prices. Again, the goal here, if you guys haven't been paying attention, the goal here is to just give a monthly pick, put together a monthly portfolio where each Friday I'm just adding a new one, layering it in. So that ideally here in a couple of weeks, we'll just start, every Friday there'll be one expiring and then replace, expire, replace, expire, replace. Giving it a full month to barely move a few percent higher. And the targets are usually 120 to 160% payout range. So I'm going to look here on AVGO. Love for these to be a little bit cheaper, especially considering that we are out of the money. It's at 123. That's a little. I want to have it. The reason I want to go over 100% is because I don't want to have to win half of them, even though I think I will. I would like to win, I don't want to have to win like 60, 70% of them to actually see a difference. I want to win about half of them to see a difference in the account. Let me see if I can get filled here way lower. If I can, I'm just going to layer a few in here. And look at this implied move on AVGO over the next one, $36. That's about 10% on the stock. So this is well within the implied move. And then I promise I've got some pretty cool training to cover here in a sec. I just want to get this out to you guys. Nate, do you got anything better for me?
No, I like AVGO. I mean, like I said, Meta's probably my favorite right now, but you're going right into earnings with that one. I also there's a couple stocks we talked about, some of the beaten down stocks that might be interesting to start taking a look at. I don't think we're there yet. I think we're still in the mania squeeze up environment. But once we get, I don't know, maybe toward the end of Q4, December, Graham, I think we should maybe do like a dream portfolio style of like the beaten down stocks, like the good companies that are just left in the dust. It might be an interesting kind of side portfolio to see if you get a little bit of a transfer of wealth, so to speak, from your hoods and your Palantirs and your Oklos over to your targets and maybe even your progressives if I'm lucky, and some of those kind of stocks.
That's not a bad idea. All right, I'm going to go a little bit further out of the money. This is trading for $1 right now. Let me just see if I can get filled. There you go, filled right away. So this will pay 150% ROI potential. I'm going to do $1,000 of it. So I'm going to do 10 contracts here of AVGO. And this is just my monthly portfolio. So our market maker move here is $36. That puts it at 380, 390. So I'm well within that market maker move. And again, use a limit order, guys. I don't want to see this price spike up all of a sudden because you guys aren't using limit orders. I mean, you can be my guest. You can do whatever you want. Oh, I did 11. I need to do 9 more. I would highly recommend this. So I set a limit order at $1. And I would be, unless AVGO runs another couple percent from here, it's likely going to fill. All righty.
For those that are new, if you missed the trade, it scrolls by in the chat. You can scroll down and see it in the announcements down below the presentation. And of course, for those that are members of the opening playbook members area, it's in the trade doc, courtesy of Graham.
Oh yeah, I did put it in there for like the first time in many weeks because normally I leave it to you, David. But I had to type it up. Sometimes I mess up when I type it in the chat. So, all right.
Well, it looked like you were also kind of bouncing between tickers for a minute. So
that is correct. All right, Nate. Anything else to add here before I get into it?
Coin, unbelievably attractive right now. If we get the Bitcoin move that you and I think we'll get to, back into the 120s, potentially to the 150. Coin's at 350. It'll probably make new highs at over 450. Put that on your list as one of those kind of catch up trades. Yeah, that's the only other one I had on my list.
All right, cool. Well, we'll go ahead and dive in here. Today, I need to start my screen share.
Oh, and the other thing on my list is to make sure they get the ATR indicator if they haven't downloaded it yet. Every opening playbook member gets it. It's free. It's in the tolls and scan section I showed yesterday. Make sure you guys grab that. I put a little video in there for you how to use it too.
All right, I'm posting one more Telegram for any laggards. Oops, I did not mean to do that. Oh, I'll throw this in there. Oh, man, I'm front running myself. I'm throwing this in Telegram, giving people one last chance to jump in. We're going to have a blast today. I'm going to take you guys through. Obviously, we have 45 minutes here. So this is going to be the speed version of kind of what we do behind the scenes a little bit. I'm going to take you through our Option Omega backtesting tool. You guys have probably seen us work in this before. Let me give you a little backstory here. Has anyone here worked with Jack Carter before? Give me a yes or a no. Yes if you have, no if you haven't. Just curious. And yes. Then, thank you. While you're doing that, I'll do a little explanation. So Jack is obviously, we call him the income ace. He's kind of the father of the credit spread here, shooting for those high win rate, high accuracy income trades. He's been doing his weekly options profits for many years now. I think it's a 96% win rate, something crazy. Anyways, He's been hitting me up for a while about these 0DT options. Obviously, we hear a lot about 0DT options, how liquid they've become. I would think about 60%, maybe even more now, of all options volume is those short-dated options. So he had a theory. He says, what if we do a calendar spread? And I'll explain what that is in a second. Calendar spread on the S&P, where we're basically collecting income each and every day on these 0DT options. Now, Nate kind of has a version of that, sort of, with the overnight options. It's a little bit different. He does the debit spread, right? But Jack says, what if we can make income on these short-dated options and then protect ourselves with a little bit longer-dated options? That's what a calendar spread is. A calendar spread is where you're selling a short-dated option, buying a longer-dated option at the same time, call options. So I'm going to show you guys what I did here. But Jack started messing with it, started spitballing some ideas. And I said, Jack, let me go ahead and take a look at it inside under the hood here in our back testing platform. This is Option Omega. We didn't build this tool. We aren't affiliated with them at all. I do think it's an awesome, subscription if you are into this stuff, if you like looking at numbers, trying to, build awesome portfolios. So I said, Jack, let me look at this in here and see if we can find a strategy here that can really print consistent winners each and every day on these 0DT options. Now, we've got a lot of ground to cover, but I'm going to walk you through this tool step by step and just kind of show you how this whole process began. And I'll even give you the exact rules for the trade that we're currently working on, or we're currently trading right now, to show you how it's working. So here, just to give you an idea of how awesome this has been, this is the live trades we've taken so far. So we've been doing it for exactly a month now. And there's some rules. Done it for a month now. 86% win rate. These are real money trades here that you're seeing. Each and every one was taken with real money. If you start with 5K, I'm personally doing $3,000 a day here with Jack to test it out. I'm doing $3,000 on my own account because it's working so good. Up $10,000 over the last month. So again, there's going to be good periods, bad periods, but really, really awesome start here so far. You may notice the winners are about 20% each. So about 20% overnight is the target we're going for. But here's the cool thing. On a lot of my strategies, when we win, we're hitting our target. When we lose, we're losing 100%, right? I think we all notice that, right? When we're on the wrong side of it, typically that's 100% loss. What's really, really cool and really grabbed my attention about this style of trade is that because we're buying a little bit longer dated option, we would rarely lose 100%. I don't think you would ever lose 100%. So here was one of the losing days. You can see it was a 6% loss on October 8th. This was yesterday because it's a calendar spread. When the markets really run, you don't win. But it was pretty close to as bad as it could get for us, and it was a 37% loss. So this actually ends up making our nets a lot better. So our sum here is 43%. I apologize. I probably should have made this a bit bigger for you guys. But here's another looking at it. So really, really cool that you can go for 20% overnight, and when you're wrong, you're not losing 100%. It's much, much safer on the downside application of it. So let's go ahead and dive into the programming here on the Option Omega tool. And I'm going to start with the basics and then show you guys some insights. And then again, you will walk away today with the exact rules for taking this trade in your own account if you would like to start doing that. I don't know if I'm allowed to do that, but hey, since I'm partnering with Jack on helping him get this set up, I think he'll give me some leeway here. So our goal here is to build a strategy that takes advantage of premium collection on short-dated options. Is everyone here familiar with when I say a short-dated option? Does everyone here know what I mean? Hopefully mostly yeses, but essentially, let me just pull up my account. If you're looking at the options chain, I'll make this a bit bigger for you guys. If we're looking at the options chain, let me just go to S&P. They have what we call daily options now. So each and every day, there's a new expiration. 24th, 27th, 28th. This is Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday, et cetera, et cetera. If I scroll way down to, next year, these are long dated options, right? They have a long time until expiration. Versus if I scroll up here, these are short dated options. They have a very short period of time till expiration. So what Jack wanted to do here was basically sell tomorrow's expiration, collect that premium, because there's that rapid time decay. Again, if we had 3 hours here, we could dive into all of the options, little nuggets here, but there's rapid time decay on the shorter term options, and then offset that time decay by buying a slightly longer dated one. The really, really cool thing here is that this one truly wins I'm going to show you, wins about 80% of the time on very standard market moves. It actually wins, like even when the market's down 0.5%, this one works really, really well because that short dated option is just getting crushed, which is bad for the buyer, good for us as the seller. So let's go ahead and dive in here. Again, we're going to be selling the short dated one, buying a longer dated option, and then the couple nuggets here we'll walk into as well. So let's go ahead and set up here. We'll just do, let me just set this to 20. I think I did it 2019. Ideally, if you're testing, if just for you guys' information, if you're testing on daily options, you may just want to start at 2022 because that's when they first listed daily options. So it's going to be a little bit skewed. Let me just do since dailies. So since daily options, I'm just going to start on the ticker SPY for now. I'll make this a little bit bigger for you guys. Oh, I don't think it changes. Did it make it bigger at all? Or did it just kind of reset? It kind of did. All right. I wish this would go full screen. So I'm going to use ticker SPY. Common strategies. You can come here and we're doing a calendar, so you can select calendar if you'd like. But I'm just going to go ahead and build it from, I guess now that I clicked that, it's going to preset it. I was just going to show you. Let me just build it from scratch. So I'm going to add a leg. Oh, wow, I've really messed this up now. Let me just go to calendar again. Where did my legs go? Maybe I have to.
Maybe refresh.
I might have to. All right, let me do long call. So here we're going to buy a call, right? And I'm going to go 2 days till expiration, right? Because we're going to buy the longer one. And then I'm going to add a leg here. We're going to sell a shorter dated call. So I'm going to sell tomorrow's expiration. So what I did here was I added in 2 options. This is a spread. We're going to buy the call that's 2 days out. And we're going to sell the call that's 1 day out. So we're taking advantage of that time premium, that rapid decay on that shorter dated option. Now here it's set to select the option by delta, right? So let me just set them both to 50 for now. So there'll be similar strikes. Make sure I have use exact DT selected. If I don't have this selected, it can kind of go rogue. Big D, you are ahead of the game. Big D said this is also called a synthetic covered call. Yes, it is. Because you're essentially getting that covered call premium, but you don't have to buy 100 shares, right? This acts as our stock position, this call we're purchasing. All right. So we're buying 2 days till expiration, selling 1 day out, using exact day DTE, and I'm going to use a 50 delta for starters. I'll just leave this as the same down here. Entry time. Now, this is interesting. I'm going to go ahead and shortcut you guys. But here, with this type of trade, you could enter any time of day. I tested it, and maybe there's even better results. I'll have to look into it. But when I started my testing with Jack, our theory was if we can get as close to the end of day as possible, the better it would be. Because we don't have to worry about buying early and then experiencing 2 days of market action. We'd much rather just be in it for 1 day. So entry time here, we did it at 3:30 p.m., so we're entering every single day at 3:30 p.m. in the afternoon, 30 minutes before the market close. Now you can play with this. I think if you went 3:50, it may get even better. We're still optimizing it, but 3:30 was just a basic good time. Again, shortcutted you there. If you were in the testing, you'd have to test all sorts of time. We're going to trade it daily. These are filters down here, and I apologize. I feel like I'm moving really, really fast, but these are filters down here for saying, hey, do we want to trade every day, or are there things we want to avoid? Like, do we want to use VIX as a filter? If VIX is high, doesn't matter. If VIX is low, doesn't matter. If you're in the 60-minute income trade, you know that's an important filter. I'll talk about that in a second. Technical indicators, gaps, squeeze, opening range breakout. This is what we do for 60-minute income. We use the opening range breakout. So all sorts of filters here. And then profit and loss. So do we want to set a profit target? Do we want to set a stop loss? Well, let me go ahead and start with just let's call it a 25% profit target. And then a stop loss. I don't like stop losses. I think they really, really make your strategies underperform. You can play with one if you want to, but I know that stop losses did not work best here, so I'm not even going to waste my time. All right. And then this is another cool one, exit conditions. So is there a reason you'd want to exit outside of percentage profit target or stop loss? Early exit, you can do it by days till expiration. You can do it minutes in trade, days in trade. You can set a time for exiting early. That'll be important here in a second. You could use VIX. If VIX spikes up above 16 during the day, we exit. Technical indicators, if something happens, you can exit early, et cetera, et cetera. And then let me go ahead and just run this to get this party started here. So again, we're doing a calendar spread here. We're buying the call 2 days out, selling the call 1 day till expiration. Our theory is that the 1 day to expiration is going to decay faster than the 2 day to expiration because that's just how options work. And we can build that synthetic covered call position to try and generate daily income on these 0 DTE options, or in this case, 1 DTE. So let's run it. Let's see what we get. And there's going to be a couple important nuggets to take away here as well. And keep in mind here, this is a fun fact for you. We are starting this in 2022 because that's when 0 DTE was listed. Think about 2022. We're actually starting this during a bear market. So it should be not that great of a time period to get started. But let's take a look here. All righty. We got a pretty good start here. If we look at our annual metrics, each and every year was positive. 2022, kind of flat. But hey, 2022 was a bear market year. Markets sold 20% or fell like 20%. So I'll take positive. Very good in 2023. Solid in 2024. 39% in 2024. 2025, almost 1,000% return. Holy moly. But let's take a look here and see what is going on. Stacy, you are ahead of the game here. I'll cover that in a second. Everybody, you guys are so smart. I come in here so excited thinking I'm going to blow your guys' mind, and you guys are beating me to the punch. All right. Cager, compounded annual growth rate, 217%. That is absolutely remarkable. Keep in mind here, though, this is scaling the portfolio. So I don't really like to look at Cager as much when I'm doing these back tests because you can just skew it by just ramping up this number, ramping it down, all sorts of things. But here's what's cool. Win percentage, 75%. Our average daily return here, the capture rate, is 8%. 8% a day is pretty darn good. I mean, we are already off to an amazing, amazing start here. Again, we set our profit target at 25%. If I flip here to trade log, you will see it. So here we bought a $1.19. This one would have exercised. Uh-oh. Let's come back to this in a second. I don't really like getting exercised, but we'll come back to that in a second. All right, this one here. Tuesday hit profit target. Monday hit profit target. Wednesday hit profit target. Tuesday hit profit target. Monday hit profit target. Wait a minute. Is anyone noticing anything odd here? Well, first off, we're only trading Monday, Tuesday, Wednesday. We said we wanted to trade each and every day. Where's Thursday and Friday? Does anyone know?
I know.
Oh, Nate, I didn't even know you were still here.
Oh, I'm just tuning in like everyone else. I'm signed into a different name in the chat, badgering you. You know.
That's funny. We're doing this, Nathan, on the SPY right now, just to show you on the SPY, and then you can flip it to SPX, XSP once you get the general rules down. And I'm going to cover that in a second. But the reason that we're only getting Monday, Tuesday, Wednesday is because we said use exact days till expiration. So because we want to use 1 day and 2 day, well, if I'm entering, today's Friday. If I'm entering Friday, we can't sell Saturday's expiration. There's no Saturday expiration. We can't buy Sunday's expiration. So that we would have to adjust these rules. So I will show you in a second. I just made a separate backtest specifically for Thursday and specifically for Friday, knowing that this one is Monday, Tuesday, Wednesday because of that 0 DTE rules. So just keep that in mind because initially when you run a backtest, you think this is great. You start placing these trades on Thursday following the same rules and you're not getting the same results. And you're going, weird, the backtest said it was this good. My Thursday results aren't matching up. Well, turns out you just got to take a moment to make sure that everything is firing as you expect. All right. So hopefully we're all clear there. I will show you guys just a little foreshadowing here. I will tell you the Friday rules. Thursday, however, has been a bit trickier, doing the 1-day expiration and 4-day expiration. We have not been able to land a perfect back test yet for Thursdays. So that's just a little sneak peek for you there. Still working on that one. But Monday, Tuesday, Wednesday, and Friday, we've got down to a science. We're trading it live and making good money while optimizing here. All right. So, well, we know this one is working pretty good for Monday, Tuesday, Wednesday, capturing daily income ideally. One thing we noticed here was that this one exercised. I don't really want to get exercised on the SPY, so we'll take care of that next. Another one here expired in today. So let's go ahead. So this is interesting. If it expired here and we still own the Friday option, now we've got just one leg of a call option that we're still hanging on to that could just in turn suck away premium the next day if we don't forget to close it. So let's set a rule here. Let's set a rule here that's going to take care of both of these issues. We don't want to get exercise shares, and we don't want it to expire on us without us knowing. So the easiest way to do it, and it actually worked great in the testing, was if we go down here to exit conditions, I'm going to use an early exit. What I'm going to do here is I'm going to say when we're down to 0 DTE, so AK just the next day, we're going to exit at 3:30 p.m. This does two things for us. Number one, it gets us out of the trade so we don't have to worry about being assigned shares. We don't have to worry about it expiring and us holding a call option and forgetting to close it. So we'll just exit the next day at 3:30 no matter what. And the reason I really like this is because we will exit this trade if it didn't work out already and then simultaneously place the next one. So we can do everything at once, make it very easy for us. Does that make sense what we're doing here? We're just placing the trade at 3:30 today. And then tomorrow, if 3:30 rolls around, we haven't hit our target yet, we'll just close it and move on to the next one. All right, let's go ahead and run this and see what we've got here. And I did run this all the way back through 2019 and such. But again, once you get before 2022, there's no 0 DTE. So the stats get a little bit wonky, if you will. All righty. So what we did here is we changed it. Remember, we're not going to be exercise shares anymore, and we're not going to have an option expiring. So now, instead of seeing us getting shares assigned, it just exited early. Exit early, exit early, exit early, exit early. So our stats still look really good. Our average return actually went up a hair. It was 8%. Now our average daily return is 8.3%. I hope you guys know, I mean, 8% doesn't sound like amazing. It doesn't blow your socks up if you hear, oh, I'm making 8%. Because most people, when they say percentage, they're talking about a year or a month or a week. We're talking about daily here. Right now, we've got it down on Monday, Tuesday, Wednesday, and this back test I'm showing you right now. That's about 25% a week. 25% a week, 52 weeks out of the year. That's some insane return. I mean, that's like 100% a month. But we're going to make it even better. We'll make it even better from here. Wayne, yeah, 8% daily compounded is awesome. That's why this cager is so high. Again, I don't really want to look at the cager because I can skew it with this number. But knowing how powerful 8% a day is, I mean, that is huge.
You know, you guys say cager a lot. I wonder how many people don't know what it means if you want to explain it.
Oh, okay. Cager is your compounded annual growth rate. So if we just did 8% a day, never compounded it, eventually our annualized returns would look lower because our portfolio would be up to, in this example, we'll say up to $6 million, but we're only making 100 grand a year because we're not compounding. We're just using, let's say, one contract a day. So the annual return would look really small. The technical way to look at it is the compounded annual growth. In this case, they're allocating 20% of the portfolio so that eventually when you're up to a huge number here, it's not doing one contract a day, it's doing 100 a day. So that annual growth rate keeps up. But again, I'll just show you here. Watch this. If I just change this, I'm not going to change anything about the portfolio, about how the trade works. I'm just going to change the margin allocation per trade, and you'll see the cager drop. That's why I don't really pay attention to cager too much here when back testing, because you can just manipulate it however you wish. So look, my cager is now 44%. Oh man, that's pretty lousy. Well, it's just because I skewed it.
The other thing you could do, I think, Graham, there is you could show it as like a fixed contract. I'm pretty sure it'll let you do that, like our max
Yeah,
contract
you
or a
can do
fixed
like,
contract. And you could just show if you don't compound, no strategy is going to be good without
Right.
actually without actually using your account to grow it.
Let's see. David, 8% a day, 365 days. Yeah, pretty big. But David, keep in mind, we're not 365 days. There's 252 trading days. And right now we're only at 3 of the 5. Yeah, if you only do one contract, your cager's 0.5%. Man, this strategy is terrible. So that's why, again, I don't want to spend too much time. I'll just leave it at 20 for now, and we'll just see how good we can get this stat at 20%. Guys, 60-minute income. I got a lot of questions there about that. I let the market tell me what to do. We are out of the window. There's no 60-minute trade today. There was no signal confirmation from SPY and XSP together. All right.
Yeah, I posted a few times, but people don't always see everything that flies by.
Okay, cool. There you go, David. All right, so here we are now. We've got our trade set up at 330 a day. We're selling 1-day expiration, buying 2-day expiration, which we know only applies for Monday, Tuesday, and Wednesday. And we've got our profit target at 25%. If we don't hit our profit target, we are exiting at 3:30 p.m. All right, let's go ahead and do some fun work here. And this is where it takes lots of time because it may not seem like a lot, but there are about 1 million different combinations we can put together here when testing. This is where the big bucks are made in the back testing. This is where the time commitment that you guys don't see when we bring out a new strategy. I mean, it takes months and months because there's about 5 main factors here that I want to test. And between those 5, you have about 1,000 different ways to plug it in. One that I like to approach first is which options are we selecting? We know the expiration, but do we know the strikes that are optimal? Right now we're at 50 delta, which is right about at the money. I'll show you that here. Let me make my screen up here.
Jeff said he still doesn't understand the 50 delta.
Cool, I'll walk you through that.
All right.
All right, let's go to SPY. So this is delta. This basically means the easiest way to understand it is the percent likelihood of this strike finishing in the money. So like this 672 has an 88% chance of finishing in the money. This one here has a 62% chance. Here's the delta's 49, so about a 50% chance of finishing in the money. So right now we are running where we are selling the 50 delta. So if we were to do it today, it'd be the 677 strike because that's the closest to 50. Does everyone see that and understand that? And then we would be buying the 50 delta, which is also the 677 strike because that's the closest to 50. So that's what we're currently working with. But now, so we know our expirations we want to use, but we don't know, do we want to use 50 delta? Do we want to use 40 delta? Do we want to use 60 delta? What's the optimal strike to use when collecting this premium? Now, this was probably the most shocking part for me because my gut reaction says, hey, if you go out of the money, these are the ones that are all operating on extrinsic value. And I apologize, we're using kind of taboo options trading terms. If you don't know what all this means, don't worry. We'll have a recording. Go Google this stuff over the weekend. But the ones that are out of the money are all running on extrinsic value, that extrinsic premium that we could collect on rapid decay. Versus I would think in the money, this one's, worth, this strike here, 676 is already worth $1.25. So there's not a lot of value left, time value on it left to sell. However, when I did the testing, I actually found that going in the money was better. But before I give you that all away, let's just have some fun here. Let's say we first want to test. All right, let's go out of the money slightly. Let's go do the 40 deltas. And again, this is where it gets tough because there's a million combinations I could do right here. I could buy the 60, sell the 40, buy the 70, sell the 40, buy the 70, sell the 30, right? So there's a trillion combinations. This is where all the time happens. But let me go ahead. We just did 50-50 deltas. Let's go and say, let's go buy the 40 delta and sell the 40 delta, see what happens. Try to remember our stats here. And we'll see if we improve. Delta is a risk metric that estimates the change in price of a derivative, such as an options contract, given a $1 change. Yes, David, you are correct. All right, so we went out of the money here. Our win rate went up, right? We were 74% win rate. Now we're 79. Are we happy about this change? Our win rate's better. Anyone here happy about this update? Obviously, win rate, as we've said multiple times, doesn't mean a whole lot to us because our average return went from 8% a day to 1.9. Oof. Do you guys remember our ending capital before was like $6 million? Now it's 239. So while our win rate went up, our returns went way down. That's why I'm not a big win rate guy, but that's a story for another day. So let's go ahead and fix this. I'm going to give you guys some answers here because we're running low on time. Let's go in the money. Let's see what happens if instead of doing 50-50, instead of doing 40-40, let's try 60-60 and see what happens. Gordon, win rate is not the end game. Money is. You are right. So let's see. Here we go, 60-60. I've got 2 more tweaks to make on this back test because I do want to get you guys these rules before we log off today. And then I want to get you the Friday ones as well. I'll show you the Thursday back testing where it's currently at. All righty. How about this update here, guys? What do we think here? The win rate dropped. It was 79%. Now it's 72%. Oh, man, that's terrible. Let's take it out back and throw it away, right? No, guys. No. Look at this. Capture rate is now at 11% a day. Look at this equity curve. Holy moly.
It's ridiculous.
Look at that equity curve. Ending capital. Keep this with a grain of salt, guys. No one here in this room that I'm aware of, Nate, unless you got secrets, has already flipped 100 grand into 39,000 or 39 million. This is back testing. I flipped
mine into 200 million.
But this just shows you what's possible, or what was possible in the past. I gotta be careful how I say this, but if you did 20% of the day every day, 330, followed all the rules. But look at this. By actually going in the money, right? Which I was saying, I don't know, in the money. I don't really want to sell one in the money. It's already got a high delta. Is there much premium to be made? Well, there sure is. Our daily return went up to 11% a day. Let's go look at the trade log here so we can just see. I just like to come in here and verify. Very important if you're using Option Omega. Make sure to do that because there will be some days. This one won't because the strikes, the expirations are different. But sometimes the strikes can get mixed up in here. So just do a quick verification. I've already done it myself. But here you can see profit target, exited at 330. Profit target, exit at 330. Over and over again. So pretty stinking awesome, right? Now, again, there's two more things I want to give you here. Jason B, can you do 60 delta with 5%? I could. I'll let you do it, Jason. I know you know what you're doing. But I have to get over to these other rules. So other things we can test, right? We talked about testing the delta, which we could have spent the next hour just doing that. We can also test our exit time or our entry time, which I talked about briefly at the beginning. I did not spend any time doing that, but if you want to, this is another variable. Your profit target, which we'll do next, and exit time. A lot of variables here. We have not even got into using the other filters like VIX, technical indicators, gaps, squeeze, opening rate, breakout, intraday movement. Guys, there are so many variables that go into this. So many variables. I'm giving you the cheat sheet shortcut here to get you guys rolling. So next up, let's try a profit target. I'm actually interested to see what happens here because I've been using it at a 20% target, which I found optimal in the testing. But now I'm sort of wondering, how could it get any better than what I just showed you? Let's see. And keep in mind, guys, this is a debit. This is still a net debit when you enter this trade. It is. So our returns actually went down here, which I'm a little bit shocked by because this is what I've been currently using. So it just shows you that optimization is very, very important here. This is what I've been trading myself right now, and I've got another rule to throw in here. But you can see the capture rate actually dropped. So I'll have to actually, when we get off this, see if we can optimize for further profits. All right, I messed with the profit target here, dropped it to 20%. And then next thing I'm going to do here is I'm just going to add in a VIX filter. Again, You could spend all day playing with just these factors alone. I'm going to shortcut it for you. We've been trading with a VIX maximum at 20. So if VIX is over 20, we're on the sidelines. If VIX is under 20, we are going for this daily income. Why? Does anyone know why this is important to us? Based on the type of options we're using. And it's kind of a trick question. You got to be really into the options and probably have done these a few times to know why this may be important. The reason why this VIX filter is important is because the way, look at this. Okay, now I know why I use that 20% target. Look at this capture rate. Capture rate's now up to almost 13% a day. All right. Why is this important? Why is this VIX an important filter? The way calendar spreads generally works is you make money if the S&P stays within a range. Now, it is a very, very forgiving range. You can see that here. But typically, and I'm just ballparking here for you, that typically that range is between 0.5% and 0.5%. So plus or minus, up 0.5% or down 0.5%. So like today, the markets are up pretty big. That's what happened yesterday. The markets were up over that 0.5%. It never got to hit that target. So right now, if you entered yesterday, which again, we don't have Thursday perfected, so we didn't take a trade yesterday, but this would be a day where it didn't work out. You'd probably lose 20, 30% today versus losing 100%, still really good. But ideally, this strategy makes money. It hits that target every single time when the markets open up flat, when the markets open up 0.1, down 0.1, down 0.2, up 0.2. Very, very typical market action where we're within just a grindy range. Even if the markets open up 0.7 and then fade to 0.4, a lot of times we'll hit that target. Now, the reason we use this VIX filter is because when the VIX is below 20, those types of days are very, very common, right? When the VIX is low, markets are healthy, they're stable, and they're just grinding higher. That is the optimal time to be using this type of trade. Versus when the VIX pops above 20, we're getting more volatility in the markets. It's much more normal to see days where the markets are moving up and over 0.5% in either direction, maybe 1% in either direction. So that's why this VIX filter is important. It keeps us where we're specifically using this style of trade on very, very healthy, grindy days in the market. So these are where this is where I currently have the testing at with Jack. We've been trading it live. Again, here's my live trade so far. This is on 1K in about a month, up $2,000. If you did $1,000 a day, I'm doing $3,000 a day. So I'm up about, I don't know the exact number, but $6,000 ballpark in a month, which is obviously pretty amazing. And you guys can see the testing here. So the rules are, again, I don't know if I'm supposed to do this, but we're going to buy 2 DTE call 60 delta. This is on SPY. And then we're going to SPY sell 1 DTE call 60 delta. Now keep in mind, guys, the deltas aren't going to always be flat 60. Let me show you. Like here, 56, 68. You have to use some common sense here and say which one's closer to 60. This one's closer to 60. This is the one we would go with. All right. Profit target, set GTC at 20%. Use the profit target calculators we have if you don't know how to do that. And then max VIX 20. So if you're looking, it's 3:30 and you're about, I should have put that part in there. Entry time 3:30 p.m. Exit time 3:30 p.m. or target. So basically, if you don't hit your target by 3:30 p.m. the next day, you just close the position. Any questions on that so far? Jeff, let's look at the 25% target because I have it at 20 right now. That's what I've been trading it at myself, Jack and I. 12%, 12.9. Let's see what it looks like if I increase that to 25. So I think it was the VIX rule is what made it outperform at 20. Let's see what happens here. And then I'm going to show you Thursday and I will show you Friday. We're still optimizing those 2 days. Actually, Thursday right now is still a no entry day for us. Friday is. So I'll give you what you would look for today at 3:30 if you want to. All right, Jeff. Look at this. Jeff was correct. Our capture rate actually went up here by using a 25% target. Look at that equity curve. My goodness. I'm having a blast with this trade right now in my own account. But Jeff, check that out. Capture rate increased. And again, there are so many variables. You mix and match them together. You got about 1 million different combos here. So that's why we spend so much time in this. And Jack and I are live trading this together, optimizing this together, and having a blast. But look at that, Jeff. Super, super awesome. DTE is days till expiration. Manny, Roger uses this, but he recommends 50 delta. All right, Manny, let's go take a look. He uses 50 delta. I'm not saying that's, he can do whatever he wants. Be my guest. But if we just look at the numbers, 60 makes a big difference. At least based on my testing. We'll see what happens here. I could be shocked. All right, I've got about 8 minutes here.
So we're bumping that up to 25, right, on the target?
We are for now, yep. So look, capture rate dropped to 11%. Still really good. So 50 is still really good. Roger is not wrong that 50 delta can be good, but 60 delta is better. That's why this is important with the testing. And 25% of the target did outperform. And I'm going to have to report that back immediately once we get off this call. Let me see. Before I show you the Friday, let me test on the Friday. Started reading. Oh, my AVGO is filled. There you go. That's why we use limit order. All right, so this is our rule now. Let me go edit. Did you edit that already?
I can't edit yours, but I posted it with the 25 in the announcements.
Oh, cool. All right. Don't tell Jack I gave this to you. I don't know if he would approve of that or not, but hey, we'll take it.
Didn't give us what?
What's that?
Didn't give us what?
Exactly. All right. Any quick questions here before we move on? We're still optimizing this, but I wanted to get this in front of your guys' face. This is our live trade so far using the 25 or 20% target. I'm immediately going to flip to a 25% target. Actually, after we get off here, I'm going to test out some other things as well. All right. Before we skedaddle, where did my Friday one go? All right. I'm just going to show you here. So we did this same testing. So here's Thursday. So again, if we're entering on Thursday only, which is what I set it to, we would be buying Monday's expiration. So that's 4 DTE and selling Friday's 1 DTE where things get a little bit wonky. Let me just see what happens here. So Thursday has been a little bit tricky for us using that max VIX profit target. Let me just set it to 25. Exit time 3:30. Same thing we said before. And I think that's the same rules. So let's see what happens if we take this trade on Thursdays. Tron says he approves. Oh, thank you, Tom. Very kind. John G, what's rough timeline for launch date if all goes well? Well, I've got a little surprise for you coming up. Well, I don't want to get too far ahead. All right, so I use those same exact rules here, right? But again, remember, we had to change the DTE on Thursdays because we can't buy a Saturday expiration. There's no such thing. So we have to do a Monday. Look at this. This is why it's so important to double, triple check your work before sending something out. If I just did this testing, I would think, oh, I said every day, right? That's every day. No, guys, it's Monday, Tuesday, Wednesday. When we look at Thursday, Thursday's no good. This puppy needs some work, right? So Thursday might have some different rules because you have to think about it. If we're selling tomorrow's expiration but buying 4 days out, that's going to skew to some things, right? That 4-day out premium is going to be a little bit more expensive than we're used to paying. So Thursday needs some specific testing. No good. So keep this in mind, guys. Do not trade this on Thursday just yet. We're working hard to make it so there is a version for Thursday specifically, but don't go rushing in just yet. Here's our Friday one. Let me save this. All right, Friday. Same rules here. And I did just update it to 25%, but you can see here, it's still not as good, right? Our Monday, Tuesday, Wednesday one's at 14%. Our Friday one is 8%. Hey, I'll still take 8% for now. That's our average. Keep in mind, we're winning 77% of the time. So 77% of the time, we're hitting 25%. But on average, 8% overall. So pretty solid overall. So we keep the same rules on Friday right now. Again, this is when we're optimizing. I would love to get this close to that 10% number like we saw on the Monday, Tuesday, Wednesday one. So Jack and I are working together to get that tuned up. But this is a trade you can take today. Just follow the same rules. You would sell Monday's 60 delta call option, and you would buy Tuesday's 60 delta call option. 25% profit target actually ended up being better than the 20%. And again, we could play with this all day, but let me just show you 20%. See, isn't it good we're doing these classes? We find out little nuggets to ourselves. Keep in mind, guys, keep in mind, this is not a trade that we're taking this very second. Oh, look at that. So maybe on Fridays, you use a lower profit target, 20% on Fridays. Capture rate actually went up to 9%. Let me save this. So today, and again, we are still optimizing this. We will find the optimal numbers. Right now, we are still in the early stages. We've only been trading this and testing this for about a month now. Normally, it's about a 3-month process. So today, use a 20% target. Set it good till canceled. Let it ride over the weekend. Hopefully, Monday morning opens up and you get to see that target automatically hit. So this is what to do today. Keep in mind, this is for 3:30 p.m. All right. I think I covered it all, and I've got 2 minutes to spare.
Wow.
Well, nice job. Exciting stuff. I will say, you kept saying things like, you're not sure if Jack is going to be okay with it. Well, just so everyone knows, the reason that, Graham just can power through and share anyways, because Jack's going to message me if anyone's upset about it. He's not going to message Graham. So Graham just gets to run wild. And I'm the one who's going to get the message, not Graham. So
that's right.
A little insight into.
Well, let me know in the chat, guys, if this was an awesome session, if you enjoyed going through this.
I'm actually really curious if our people liked more of in the weeds kind of strategy session like this. That's off the cuff. It's not necessarily XYZ, but more of this is what we're working on. This is how it works. I think you actually learn a ton going through some of that stuff that you just went through. Like it really, in my opinion, I feel like I've learned as much about trading going through these tests and kind of understanding cause and effect with the data as anything else.
Yeah, and I do understand that we did talk. We had 45 minutes to cover some very, very in-depth options information. So I do know and understand that not all of this probably made sense off the bat. But I would like to see if Jack is open. Of course, if you guys are open as well, I would like to see if Jack's open to opening up just a beta Telegram while we continue to optimize. We continue to take these trades together. If he's open to just sharing these trades with you guys as well in a beta Telegram, free, totally free for the time being until it's ready to launch. You guys give us your feedback, everything as well. But hopefully that's something Jack's open to, and then it'll make your life a lot easier. You don't have to go select the 60 delta and figure all that out. It would just be listed out for you guys in the Telegram.
Can you clarify for a couple of people, the strikes should be the same on the two options, and it should be a debit or a credit?
Okay, cool. Great questions. Let me start with that second one. It's always a debit. So let me flip here. Which one is this one? This is the everyday one. All right. It's always a debit. See, debit, because you're buying the one that's a little bit further out and selling the shorter dated one. So you're going to pay a debit and then use a credit for closing. And then that other question was, is it always the same strike? That is a very, very good question. And we tested same strike or same delta. And there's a slight difference because tomorrow's expiration is going to have a different delta than 2 days out. What we found was the delta was more powerful. So you'll see like This example of yesterday's trade, which again lost. Keep in mind here, it lost. Look at this loser here. It wasn't 100% loser. It was a 9.5% loser. So when you lose, you're not losing 100%. Lost 9.5% yesterday on the SPY. I took on SPX. I'll talk about that in a sec. But always enter for a debit. Not always the same strikes. Always going to the closest to 60 delta. So this one was 665 and 666. However, a lot of the times it is the same strike. 663s, 661s, 672s, but not always. So look for the delta. Delta is more important than strike. Also, I saw some people ask about Matt. I saw people ask about does this work for SPY or SPX or all of the above? It works for all of the above. Right? This testing was done on SPY. You can see here on the tracker, I started trading it on SPY. But someone noted that if you want to do a large position like me, I'm putting $3,000 a day in right now. SPX, just 10x the size, so it's a lot cheaper on the contract commissions. If SPY was the same size as SPX, I would use SPY just because it's a little bit more liquid. So if all things were equal, I would use SPY.
So Graham, just thinking here in real time, you and I can touch base with Jack later. I like the beta idea. I mean, we've had a lot of success kind of like optimizing with real people trading real money because we get way better feedback that way, obviously. But maybe one thing we could do is set up a little more exclusive beta test where people kind of, can sign up through a form or whatever and say like, hey, I'm agreeing to do the beta test. I'm going to provide actual feedback. I'm going to let you know my track record. I'm planning on joining if it's successful, and just kind of get like a little more organized group instead of just kind of like everyone flooding a Telegram channel and not really being able to follow up. That might be a cool way to do this, since it is, I think, already pretty proven. It's more like a beta 2.0 since you've already done the beta. That might be a cool way to do it if we could get just a little more focused group.
Yeah, that sounds great. Yeah, sounds awesome. You should work on that over the weekend so we can bring it out to folks next week. Mac,
right on it.
Mac is a good question. What if there's no 60 delta? We just go closest to 60 delta. So if it's 62 and the other one's 51, we would do the 62 delta. We had another question. How would you handle assignment? John, that's why I said in this early exit, it's a win-win. We exit at 3:30 to avoid assignment. And then also it clears our books while we place the next trade. And then I saw someone again ask about why not on Thursday. We tested these same rules on Thursday. No good, because the DTEs skew the profitability. So this one still needs optimization for Thursdays. Chris says my brain hurts. I love it. That's why we record this.
Actually, I thought we did it to make people's brain hurt.
We do it to make people's brain hurts. Oh, also the other cool thing here is this is not a day trade because you hold it overnight. SPX has no assignment. Parker, you are correct. You could use SPX or XSP for no assignment. SPY has more liquidity. So pick your poison. All right. With that said, we are currently trading the 60-minute. Well, not today. We didn't get a signal today, so don't worry. Don't sweat it. I'm happy because we're at 10 for 12 so far. Has anyone been using the runners on 60-minute? I've been pretty much exclusively going with the runners. No target. And it is also 10 of the last 12. Which on $1,000 over the last 2 weeks is up $6,000. We're doing $3,000 a day on that one as well. So it's up about $18,000, roughly speaking, in the last 2.5 weeks using no target, which is super, super awesome. So
you're saying you won the same number using no target as you did when you set, if you had set a target.
Exactly, which will not hold up over the long run. Long run, the target's going to have a higher win rate. However, the no target has a higher profitability. And these streaks that we're getting right now are the reason why that happens, why I can just quickly, and no pun intended, but run up the score, so to speak, when we let those runners ride. So we will go ahead and play that up, play that class here if you guys want to know how to get in on some of these daily trades right away. Dave, if you want to go ahead and get that. And get you guys.
here. We are looking at the real-time data plus the 2020 hindsight data. So going back and looking at the real trades from 2018, no, from February 18th, 2025 through June 18th, 2025, we had an 86% win rate, average return of 32% over 1 day. And the live trades published from June 27th going through July 18th. So that's the last month or so of Graham trading. Guess what? Also 86% win rate with an average return a little bit better over that 1 day. Obviously, can't guarantee future returns, nothing like that. If you want to go through our terms, you can do that on Trading Pub. But so far, those results have been beautiful to watch stack up. And just to make sure you guys heard it the first time, let's be clear. There are going to be losing trades. There are going to be winning trades. That's how every system works. Nothing's going to print out winning trades every time. The idea here is to give you an edge, and I personally think this is one of the coolest, biggest edges that we've ever had the chance to discover and trade with our own money, and I think you guys will be pretty excited about it too. So I'm Nate Tucci, if you guys don't know me, and today, guess what? We're talking about the same idea that's going to be worth a potential $500 or more by tomorrow morning as we all trade it together. And if things go as we expect, that $500 should hit our account within the first 60 minutes of the day. All we have to do is set our position right around 10 a.m., and then actually let the market go in either direction based on where the entry comes. And as long as that happens, we should see about a $500